Today, I want to look at this question from May 2018, question 3, on manufacturer financial statements. So the question 3 read, ABC Limited is a manufacturer of motor vehicle spare parts, and the company trial balance as at that 1st December 2017 was as follows. So we have the share capital 30, you have the revenue reserve 8% debentures, you have inventories, we have raw material, work in progress, and finished goods. We have also been given the purchase of raw material, creditors, land at cost, factory and office building. We also have factory provision for depreciation, plants and machinery. We also have the plant and machinery provision for depreciation as at 1st January, motor vehicle at cost, motor vehicle depreciation as at 1st January. You have the sales, debtors, factory wages, which is indirect labor, factory wages for others, factories, heating and electricity. We also have factory overheads, machine repair and maintenance, distribution expense. We also have administration expense, selling expense, interest on debentures, backing balance, and also the cash in hand balance. Then for our additional information, we have inventory as December that 1st 2017 was valued as, you can see the raw material, work in progress, and finished goods. So this is our proceed inventories. We also have depreciation. We have been given the 2% for factory, plant 10, and motor vehicle 25. Then we have been told factory and office buildings are regarded as 6/7 for factory and 1/7 for office. Motor vehicles at 75% for distribution and at 5 for sale. So we are going to apportion all these. So you have to apportion for factory 6/7, office 1/7. We go for distribution expense, we apportion for 75/7 on motor vehicles depreciation, as well as 25% on selling expense. Then we are told, although no provision for that bad and doubtful debts had been made previously, it is considered necessary to write off a debt of 200,000 and to make provision for doubtful debt of 1% in the balance of debtors. So you have to make that 1% balance doubtful debt. Then you also been told no entry have been made in the books of account in the company in respect of the foreign items accrued as at that 1st December. So these are accrued items: factory electricity, repaired machine, salesman traveling expense, transport expense, for delivery of finished good, director remunerations. So you have to do all that to accrue that. Then a consignment of raw material was received between Christmas and New Year, and due to the factory being closed, was stored in the gatekeeper store. The invoice for 170,000 for the consignment has not been recorded, and the goods are not counted during the stock take as at that 1st December. So we also have this for the invoice omitted. Then we have the rates of 960 had been paid in respect of the half year from October 2017. So we are going to calculate the half year from October 26 to 2018. In the account, this should be divided between factory overhead and administrative expense in the ratio of 5:1. So also this, we are going to get the ratio of these rates. For the factory overheads, 5/6, and administration expense, 1/6. Then annual insurance premium of 900 were paid for the year commencing 1st May. So these were apportioned between the factory, distribution expense, and administration expense, the ratio of 4:1. So we also going to apportion this again, 4/7, 4/6 for overheads, distribution 1/6, and administration 1/6. Then we are told a commission on the net profit is payable to sustain management staff on the company. A provision of 10% of the company net profit after charging this commission is to be made. So we are going to get this provision of 10% of the company's net profit after charging this commission. So it's 10 over 110. So that one we are going to adjust. So then there you have the tax here for provisionally estimated to be 500. So you trace that. We have also been given the proposed dividend 4% of the ordinary shares. So we are going to calculate that for ordinary shares. Then we are told to prepare the manufacturing account as well as income statement as well as financial position as at that 1st December. So we are going to do that. So let's continue. So I have placed the question on the right hand side so that we'll be able to see it. So this is our manufacturing account for the year ended at 1st December. So we are going to start with the opening inventory for you have the raw materials, work in progress, and also we have the finished goods. So for the raw material, we have been given the trial balance, which is 100. Then you also have to add the purchases for the raw materials. We have been given to be 6350. Also, we have the unrecorded consignment. So these were good received but not invoiced or counted, as we can see in our note 5. So I'm writing the explanation here or the calculation note so that we can be very easier to know where the figures are placed. So we have to add that in our purchase. So for 170, then you also have now to reduce our inventory with the closing inventory, which is 17,200. So we get our raw material consumed to be 61,420. So that is what we are supposed to do in our opening. So then we have to add our direct labor cost or the wages. So we have 11,900. So that we now get our prime cost for these two. So the raw material consumed plus the direct labor get our prime cost to be 73,320. I think we are together up to that point. And remember, we are preparing manufacturing account. So let's continue. We have now to add all the factory overheads. So we have the factory wages, which were given as others of 4,800. And then we also have factory heating and electricity. So for the factory heating, we are being given 5,550. So we also have to add the accrued on note 4, which is 320. So we also have to add that to get 5870. Then for the repair of machines, we have been given to be in our TB to be 4,100, but in our accrued we also have 80, so we also have to add that. Then you also have machine depreciations. So the plant and machinery, we have been given that for the plant at cost, let me check that. Plant and machinery, the total of 600. Where is it? Yeah, this one, plant machinery at cost of 600. So that one we are told that the plant and machinery have 10%. So we are going to get the depreciation, which is 10% times cost from the trial balance, which is 600. Then you have the building depreciation for the factory options. We are given 2%. So for the building, we have been given to be 17,500 at cost. So then there is this apportionment, which was we were told factory and office buildings were regarded as 6/7 for the factory and 1/7 for the office. So we get, since we are calculating for the factory and office building, you get this, you have to calculate to multiply by this apportionment. So you have to multiply by 6/7 for the factory options. Then you also have to calculate the insurance for the factory options. For the insurance, we are given that in note 6, in note 7, annual insurance premium of 900 were paid for the year commencing 1st May 2017. So it went up to 2018 for the whole year. So for the factory, we are going to get the apportionment, which was between factory overhead, distribution and administration. So factory overheads ratio are 4 out of 6. So we get 4 out of 6 of prepaid insurance. So we are going to calculate with the whole amount of 900, the one that we got. Then we get, which we are going to get, that is to be 200. Then we are also going to multiply by the 4 month. So if you calculate here from 2017, there is excess of 4 month. So that we get to be, which is 200. So we are going to get 800, which is the same as which is 200. We are only going to get the 200. It is 4/12 of 900. Yes, we are going to calculate as 4/6 times 4/12, the prepaid month, then times 900, we get 200. Yes, so we are going to get 200 as the result. Then you also have this one, the rates or the factory options. So for the factory options, we have been told that in the same rate that, which is note 6, the rate of 960. So we have been given that the ratio is, for the factory, is 5:1. So that is 5/6 times 960. So you are going to get the 900. So let's continue. Then you also have now, to add all the total factory overheads. When you add all this, you get 1700. So then you have to add the work in progress, which was 9350. Then you subtract the crossing work in progress 9950. So then, so that you get now the cost of production, which is equals to prime cost. You add all the factory overheads, whereby you also add the opening and closing work in progress, which will give you a total of 9130. So this is how you are supposed to calculate the cost of production in a manufacturing account. So remember, you have to start with the raw materials. You add the direct labors, so that you get the prime cost. Then you also less the factory overheads, and as well as you add the work in progress less crossing work in progress to get the cost of production. So if you have any question up to there, you can comment below as we continue. So I'd like we look at the income statement for this company. So let's continue as we take some screenshots. So we have the income statement for this ABC as the year ended that 1st December. So we said it's the same as that of a sole trader, but you only have to add those the expenses, the additional and the adjustment. So we are going to start with the sales. So we have the sales as per our trial balance. We have been given to be the sales or the revenue, which is 112,750. Then we have to less the cost of sales. So that is the same as our net sales. So our cost of sale, the opening inventory from the trial balance, we had been given to be 12,800, as you can see. Let me check it where it is. So our inventories, especially that one of a finished good. Yes, it is here, 12,800. Most I'm taking some moment to see because of the small visibility. So you also have the finished good, which is 12,800. Then you have the to add the cost of productions, which we got from our manufacturing account. So we have to add that, the cost of productions. Then we also have to raise now the closing inventory of the finished good, which we have been given to be 14,460. So our cost of sale, when we add and subtract this from our net sale, we get a gross profit. Uh, uh, the cost of sale is 88, but when we less from our net sale, we get 24,470. So then we have to subtract all the operating expenses. So we have three types here. We have been given the distributions, the selling, administrations, all that. So we are going to start with the distribution. So we have to read every note in our addition information so that we get all this. So we have been told there is this delivery transport accrued. As you can see, we have a transport expense accrued, which was 70 from our note 4. Then we also have a distribution from our trial balance, which we have been given to be 350. Then we also have now to get the depreciation expense, which we have been given for motor vehicles. We have been told that the factory and office building were regarded as 6/7 for factory and 1/7 for office. Motor vehicles at 75% for distribution. So in our distribution, we have to get the 25%, which is the in a reducing balance. So we have been told here it is on reducing balance. So you have to subtract the accumulated depreciation. So we are going to get the 25% on which was on costs for the motor vehicles. Our costs. Let me see where the motor vehicles cost is. Which we have been given at cost to be 4,200. So times 25%, you get 1050. Then you have to apportion this 75%, so that you get 787. Then we also have the expense that we have been told from our calculation on note. It was on note 6. Note 6. Yes, note 7. Annual insurance premium of 900 were paid for the year counting. They were apportioned between factory, distribution, and administration. And since we are in a distribution and our ratio is 4:1, so we have to get the total, which is 1/6, and we get the prepaid. So the prepaid was 300, and here we had the total of 900. So our expense here is 600 for that current year. So we get the 1/6 of 600, which will get it's 100. So that is our on a distribution expense. So our total distribution will be 7307. So we also have now to calculate the expense on selling expense. So we start again to read the notes. So go direct to where I have these notes. So we have a administration expense from our TB. As you can see, that is 2920. Then you also have the building depreciation. You have been told in our note 4, factory and office building were regarded as 6/7 for factory and 1/7 for office. So, and our depreciation is which is 2%. So we are going to get the 2% times the cost. So our building cost, we have been told, is 17,500. Then you have to multiply by this apportionment, which is 1/7. So that you get the for for the factory and the office buildings. So you get for the buildings for 1/7. So 2% times that you get is 50. Then you also have the insurance from the 600 expense in our note 7. So we have the administrative expense, which is 1/6 times the 600. So that we get it is 100. Then for the rates in note 6, we're also going to get administrative expense, which is 1/6 times the 960, which was supposed to be 1/6 over 960, which is 160 in total. But it was 80,000 was expense. So the 3 months which were prepaid, and also the 3 months which were accrued. So you have also to write that. So we are going to write the 80 which were expense from our rates. So we continue. We also have the director remuneration, which was accrued on our note. We get that one in our note 4, which is 250. Then you also have the traveling accrued for the salesman, which was 60. So you add all the total administrative expense, which are going to give us the 13,780. And sorry for that, I skipped this one for the selling expense, whereby from the trial balance we had the selling, which was 2750, and also we had the depreciation of motor vehicle, which we are in our note. We had been told that in our note for 25 for sales, so you have to get the depreciation, which was 25% per annum times cost, which was cost for the vehicle. The cost of the vehicle was 4,200. Then you have to multiply again by 25. So in the first instance we had gotten to be 1050. So we have to multiply by 25%, as you can see from our first calculations. So here we had seen our depreciation to be 1050. So instead of apportioning on 75, which was for distribution, we now do for 2025. So that one was also the total for selling expense. So the three totals, operating expense, when you add together, you get 13,790. So you have to subtract from our gross profit to get 10,690 hours as our operating profit. So then you also have to adjust that. So you have to raise additional adjustment. So like debentures, we have been told there are debentures which were paid from our trial balance, which was 800. Interest debenture paid 800. Then we also have bad debt in our note 2. We have to do away with those 200,000 in our note 3. And then you also have the provision of bad debt in the same note. We have been told to apportion it at 1%. So we are going to get the 1% times. For the trial balance, it was 24, 200. We less the 200, so that we get the provision, which is 240. So the subtotal before commissions is 94. So we also have the staff commissions in our note 8. In our note 8, a provision for 10%. So this one is the one I say that you have to apportion 10 over 110. Since we are charging this commission, the company's net profit after charging the commissions. So it will be net percent of the net profit after charging the commission. So it's 10% of 110, or 1 over 11 times now this our subtotal. So we get it is 859. So we subtract from our subtotal commissions. Before commissions, we get 85,900. Then you have to raise the, so this is our net before tax. We also have to raise the provision for tax. We have been told it is 500 in our note 9, so we raise that. So our net profit after tax. Then you also have to address the note 10. You have the dividend, proposed dividend of 4% on the ordinary shares. So ordinary shares here you see it's 30,000. So 4% of that you get 1200. So our retained profit will be 6891. So that is all what we are supposed to do as our income statement. So I hope if you can go slowly on this video, you can be able to understand more on how I have done this income statement. So the last part is the statement of financial positions, which we are supposed to create. So if you have any question, please let me know in the comment as we continue. I'll get back to you. So we have the financial positions. So we start with the title for the ABC. So we're going to start with the non-current assets. So you have the RADs, the buildings, the factories, all that. So for the RAD, we have been told note 6. We have the rates paid in respect of the half year. The accounts, this should be divided. Yeah, it has not been depreciated. So we get the notes, the RADs at cost, which is 6,000. So I think this is confusing, should not be there. Then we also have the factory and office. So its cost was 17,500. So you have to subtract the depreciation that you have calculated there on top, which was 350, the 2% of cost. Then also the plant machinery at cost is 12,600. The depreciation calculated for 10% was 1260, as well as that of motor vehicle. The reducing balance method, which was 25%, we got is 1050. Let's continue. Then you also have, so that is our non-current assets. So you also have the current assets. So we are going to get the inventories from note 1 for the raw material, work in progress and finished goods. Those are our closing balance. Then we also have the debtors. We had been given to be 24,200. You have to raise the bad debts as well as the provision, so that we get 23. Then you also have the receivables. We have that one which were unrecorded in our note 5. So we get that one for 170. We have to add that, and as well as the split from our rates. So yeah, 4 over 12 times 900. So the 900 that we were talking about, since it was half year from October 2017. So for the factory will be 200, distribution 50, admission 50. So that you get a total of 300. And then you also have the prepaid insurance. It was 3 more months which was paid. So you also have to split that to be factory 400, admin, which will be 0 over 6 times 160, which is 80. So that the total to be 480. So we are calculating according to the prepayment which were done after 2017. So then we also have the bank 1960, as well as the cash which is 150. So the total current asset 68,620. When you add both, you get 106,260. So that is the current assets. So we also have the equity and liabilities. So for the equity, we are going to start with the share capital. Will be given to be 30. We have the share premium as well, 17. And then you also have the reserve, the opening, which you have been given as 98,800. That one is given on reserve 98,800 plus what we have gotten as our net profit 1891 gets 16. Proposed dividend which was 200. We have to raise that from our proposed dividend since we have to pay, so we get the total to be 16,699. So our total equity will be 63,844. Then you also have the non-current. You have the 8% debentures, a long term, so that one will be 20,000. Then we also have now to go to the current liabilities. So as our TB, we have the creditors, we have been given to be 18. Our creditors is 18,050. And then we have the accrued repairs. So all these repairs we have to add them. We have the 80 factory electricity, we have 320 transport, 60 accrued traveling, which was 60, and directors remuneration 250, as well as the provision for tax. So provision for tax we are given as to be 500. We are adding all these since they are accrued liabilities. So, and as well as the proposed dividend, which is 1200. So you get the total now current liability to be 2530 plus the equity, total liability plus non-current liability to be 4530. Total equity when you add, you get 106,260. So it balance with the assets. So I think for today it's very fine, as it has balanced totally. So that is what you are supposed to do when calculating for income, tax, manufacturing account, as well as statement of financial position. So if you have any questions, let me know. You have to go through this again and again so that you'll be able to understand. And if you have any question or additional information, I'm open. Please let me know in the comment below. So thank you. See you.